Yeah, I mean, there's 1,000 reasons why silver should be 50 times higher than it is right now. Remember, silver is 1/2 of its all-time high, less than 1/2. Under $25 is less than half of its all-time high, whereas gold has doubled. And is there more gold being mined? Absolutely. Where does it go? It goes in the vaults. It keeps adding. Where does the silver go? It gets consumed. It gets put in flat screen TVs and smart bombs and solar panels and electric cars.
Yeah.
So the reality is silver is so massively undervalued now that there's no way out of it unless you shut down the COMEX, say, okay, everybody settles in cash, and then never open up the COMEX again.
Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, Bix Weir. Bix, great to see you today.
It's good to see both you guys. You guys are working hard. I love it. Videos popping up all the time.
Oh, yeah, we're having fun. It's always great to have you on, Bix. Bix, you sent us a chart about the analysis of the 2021 Silversqueeze and the SLV purchases. So break down this chart for us.
Well, what this is the SLV inventories at that time. We talk about the Silversqueeze a lot. It happened end of January, beginning of February, where silver ran from $25. It was going to hit 30. We're all excited. And then it didn't. And this is an analysis of what was going on at SLV at the time. As you can see, SLV pretty much had 600 million ounces in it for a long time, hovering around. And then we get to the 29th, and then the 1st and the 2nd over the weekend. And it was a gigantic jump of 118 million ounces that were basically somebody bought them. Somebody bought 118 million additional ounces. That's not counting the short position on SLV too. So it's probably even more than that at that exact time that silver was running. So to me, I dove into, well, what was that? I mean, is that just everybody getting excited about silver, or was it something else? Yeah. It turns out it was something else. It was a single entity. A single entity bought more than that. Entity called Private Advisor Group LLC. And as you can tell from that second graph there on the bottom, that they pretty much had almost no position in SLV. And then they are required to report quarterly. They had 190 million ounces, which was 1/3 of SLV at the end of the first quarter. So a single entity bought 1/3 of SLV in a single quarter, but that's just the end of the month. We don't know how much they bought during the entire fiasco. And it could have been 200 million. It could have been 3. They could have owned 100% of SLV at that time. We just don't know because they don't have to report until the end of the quarter. But clearly a single entity right there, you could see that they were buying. That's the only entity that was buying SLV at the time. And remember, SLV gets replenished through the authorized participants of SLV. Those are the banksters who are basically rigging the short market.
Well, I think what I remember from that time frame, and you correct me if I'm wrong, Bix, on this Friday here, January 29th, the price was way up. On February, it opened higher, but then tanked on the Monday, right? It opened high, like above 30, barely, and then came back down $2 that day. But then the next day, it shows a huge deposit into SLV for Tuesday. So I think what pissed everyone off that made no sense was that this Monday to Tuesday number, just climbed, one of the biggest days in history of adding ounces to SLV.
Yeah.
And the price was dropping. It's like, that's what was like, made no sense. It's like, if someone's coming at you and saying, I want to buy 20 million, I want to buy 30 million ounces. It's like, raise the offer price, right? You don't, you're buying a lot. Let me drop the price for you. It's a same. I mean, what the was going on, Bix?
Exactly. It is a great display of the disconnect between the real thing, physical silver, and what goes on the COMEX, the futures and options market.
Yeah.
I mean, they were trading billions of ounces every day on the COMEX. And yet what was really going on was the bankers were getting called for their silver because of this single entity, private investor group LLC, was buying massive amounts of SLV to the tune of 1/3 of the entire fund they bought in the first quarter.
What's so crazy? 1/3 of the entire fund. We're talking 200 million ounces, right? Something in that neighborhood.
190, I think I said there.
Yeah, that's 25% of global mining supply. I mean, we only mine 800 million ounces a year. So within a day or, you know, a short period of time, days or weeks at most,
all we know is first quarter.
They wanted to buy 25% of global mine supply.
Yeah.
And
they
the price,
did.
and they did successfully. And someone, you know,
and they did it.
You think if one entity was buying 25% of global mine supply, the price price would react a little differently. I don't know.
They did it the right way. They bought on a real exchange, SLV, because they took delivery of most of that silver. With SLV, the way it's structured is if you buy 50,000 shares of SLV, you can take delivery of that physical silver. So over the next 3 or 4 months, you can see that the total amount went from 729 million in SLV. Over the next quarter, they sold, or they took delivery, or they sold. We don't know.
Okay, so let me back you up there. That's the first I've ever heard that you can take delivery from SLV.
Yeah.
Okay, so let me just, what I'm understanding, and you correct me if I'm wrong, only the authorized participants can make deposits or withdrawals from SLV, and that's like the big bullion banks that are running SLV. So you're saying if you're probably a big enough customer of JP Morgan, then JP Morgan will let you go in and they'll take the withdrawal on your behalf if you're a big enough fund? Is that what you're saying?
They're required. See, most of these banks say, and JP Morgan's the number one person who says that they don't hold it for their own account. It's for their customers that they hold gold and silver. JP Morgan and Blythe Masters came out and said it to everybody, hey, we don't trade on our own account. These are our customers trading. Well, their customers are owners of SLV. Somebody was the broker for a private investor group. And so every 50,000 shares they have, they can demand delivery through their broker.
Okay.
And their broker is the authorized participant.
Okay, so the authorized participants are just acting on behalf of customers.
Yes, yes.
And so that is possible to get silver out of SLV.
Absolutely.
Okay.
And same with what else? The Sprott Fund. You could take delivery of shares.
Yeah, if you have like what
10,000
ounces. 10,000 ounces. But you don't have to be big to do that. An individual who owns PSLV.
An individual could do it for SLV as well. If you have 50,000 shares of SLV, you can cash them in for physical.
Which is 50,000 shares is not quite 50,000 ounces, but it's
right.
Fairly close. It's within 5 or 8% of.
Right.
Okay, I get you.
So during this time, the end of January, beginning of February, that's when we had Jeff Curry roll out of Goldman Sachs and, oh, no, these are not, this Silversqueeze is not real. These are people hedging their physical deposits into SLV and ETFs, which is completely illegal according to the ETF guidelines. The prospectus says for every share issued, an ounce is deposited. And what Jeff Curry said of Goldman Sachs, he said, no, an ounce is deposited, but all the bankers are hedging that position. Well, it wasn't their silver to hedge. They have deposited into SLV, which is the ownership owned by the SLV shareholders. So, and Jeff Christian said the exact same thing, and they were both absolutely panicking. They were panicking because this private investor group LLC was collecting shares of SLV. The authorized participants had to make deposits into the SLV silver account, and then over the next 2 months, these guys, the private advisor group, were pulling out their physical silver, such that the beginning of the end of the second quarter, they'd pretty much back 100 to 600 million ounces. So they were able to get over 100 million ounces in a matter of a couple months.
So they forced SLV to go acquire the silver from somewhere, and then they took it out of SLV basically at spot prices.
Mhm.
And the rumor is where they got that physical silver was from the JP Morgan stockpile, and JP Morgan was not selling them the silver, but they were leasing them the silver, meaning they're going to have to give that silver back to JP Morgan that already is gone from SLV.
Hold on.
And they shorted it on the comment.
So let's break that down. Because that's the big criticism and the difference between SLV and Sprott PSLV. SLV does a lot of funky shit with leased silver and paper contracts at the same time, whereas PSLV doesn't. PSLV has clear title to 1,000-ounce bars, no leasing going on with their supply. Is that correct?
Well, I would say, now I can't make that claim against SLV.
Well, come on, we got to make some claims here.
No, we can make a different
Speculate
claim.
with me. Come on.
We can make a different claim that's just as relevant, even more relevant, is that it's the authorized participants that put physical metal into SLV that are leasing it.
Okay, so
Those
the
are
authorized participants are hanging out there on a limb somewhere where, okay, SLV on SLV's books, they're claiming we own it free and clear. But someone else, the bullion banks have some leasing contracts saying, that's kind of shady though, because the bullion banks will pull it out to make good on their lease. It's like, as I'm understanding this, SLV technically is not leasing, but they really are leasing through the bullion banks, and the bullion banks are leasing on their behalf.
No, because remember, the SLV silver is not owned by those authorized participants. It's owned by the shareholders. So unless the authorized participants buy the shares of SLV, that's the only time they can pull it out.
This sounds like a huge legal mess if there's a big fight over who owns the silver.
The legal mess lies in the hands of the silver cabal, the Goldman Sachses of the world, the JP Morgans of the world, because not only are they're putting leased metal into SLV, they're going to have to pay that metal back to JP Morgan, whoever they bought it from. They are also shorting on the COMEX to keep the price down. So it's a double short. They have to close out the COMEX contract, and they have to return silver that's not even in their possession anymore to JP Morgan after the lease term is up. So it's kind of like a double short.
So they don't want it to go up because it blows up a lot of their leverage in those contracts. Is that the gist of why they want to, keep it down?
Well, ultimately, the reason for keeping the price of silver down, I mean, there's many reasons. The obvious one is it is the opposite indicator for how strong the dollar is, because it is a monetary metal. We all know that. No matter how many times the bankers say that, it is still a monetary metal. But the key thing is the short contracts. These huge banks have this gigantic short position that they just can't get rid of. And if a too big to fail bank gets destroyed in silver, they are gone for good. And these banks can't fail. So it would take down the entire system. If the price of silver went to $1,000 tomorrow, all these big banks, Bank of America, Goldman Sachs, UBS, our favorite Deutsche Bank, although I heard Deutsche Bank got a silver bailout, all of them would go belly up. And being a too big to fail bank has ramifications throughout every single market, every single financial entity out there. A too big to fail bank means just that, too big to fail.
So I know you watch the numbers like a hawk, way more than I do. I'm an amateur hack here. So do you see any evidence in these COT report, the commitment of traders reports, that any of them are reducing their leverage or reducing their positions in any of these things?
Absolutely. JP Morgan is already gone.
Yeah.
We've seen them get out of it. How they got out of it, they probably colluded with others to get out of it and paid them off in other ways.
Okay.
But the major short position of the commercials it's one of the lowest ever now. Now the problem they have sitting here under 23, in the $23 range, is that there's nobody left to sell to take over that short position. Nobody's willing to short at this. So they're going to have to rise the price again and play the game one more time at some point to get anybody to offer to sell. Right now, nobody would sell in their right mind, because we're under the 200. We're under all the moving averages also. So all the tech funds aren't going to sell further short, because they're going to have to cover at some point, the tech funds.
Here, okay, let me pull up was I sharing my screen that entire time? Yeah, I guess I was. Sorry, audience. Here's the technical. It seems like we're at the lower end of this range. This is
What they look at is the 50-day, the 100-day, and the 200-day moving averages.
okay. I don't have those up here, and I don't.
And they're right around between $25 and $26 and going lower and lower every day. So
Yeah.
I think a break above $25 is, see, that's the thing. You get to a point where somebody's going to have to start shorting to stop the rise after it breaks out of the $25 range.
Mhm.
Because I mean, it's clear sailing above 30 and then clear sailing above 50.
Yeah.
Yeah. So, they're going to try to run it up probably at least to the top of this range, 25 to 28. And then they're going to try to do the short game again and see if they can hold it down, or
I don't know. They are losing.
Come on, speculate for me, Bix. Come on.
I will. Absolutely.
Okay.
I think the hammer's been put down on them. I think they're working on a way to end the game. And the end of the game is they're going to let silver rise to a certain point, and then they'll try to stop it. Can they stop it?
Yeah.
If the silver story continues to break loose, the silver manipulation story, and the fact that we're running out of silver, the world is running out of silver, if that story continues to foster, the investors might even take interest. Normal investors,
Yeah.
which is would be unheard of in such a tiny market as silver.
Well, something just happened. I actually just tweeted this. It's not specifically to the silver market, but there's a connection here. Zinc is breaking out right now.
Mhm.
And it's not because there's a shortage of zinc. It's because the smelters are having to shut down due to electricity shortages. And I wanted to sort of make that connection. The same thing's going on with silver. I mean, if there's electricity shortages, it doesn't matter how much raw ore is being mined out of the ground. If the end refiners are having, disruptions just to energy shortages that we're having in China, India, Europe, everywhere, I mean, that affects the end version of silver that industrial users actually use, correct?
Theoretically,
We're seeing also like the UK Royal Mint can't get enough blanks right now because they're in container ships off the coast, trying to get unloaded because they can't, silver's too heavy to fly overnight. We just did
that's the reason they gave. The reason was ridiculous.
okay.
The truth is that silver at sub $25 is basically giving it away for free. And they can't get the blanks because no one wants to sell them any blanks. They don't want to keep selling silver. That would be crazy for them to do at $20, $24, $25.
Yeah.
I mean, first Majestic held back over 40% of their production.
Yeah, Endeavor also 1 million ounces. Yeah.
I love hearing that because I have been a huge critic of the CEOs of silver mining companies for the past 10 years, screaming about, hey, it's your industry. I shouldn't be out there screaming about manipulation. You guys should be out there screaming about manipulation. And finally, they're starting to do something about it.
Well, that's the primary silver miners. They feel it. But, let's be honest, the byproduct guys, the guys who are copper, zinc, lead, who are 73% of silver supply, their silver revenue is between 1% and 5% of their total revenue. So they don't care enough about the difference between 23 and 28, right? They just don't.
But that's it. That's the key.
Yeah, I know, but they don't.
If silver was $1,000 an ounce, they'd care a hell of a lot.
Yeah, well, then they'd be probably primary silver producers also.
Absolutely.
By revenue, if silver was at $1,000 an ounce.
Is there any other commodity where the majority of that commodity is gotten as a byproduct of something? No.
Yeah.
Only silver is silver is the forgotten stepchild, and it has been for so long.
Well, it's all interesting. It's we're the past 2 or 3 months, I felt like everyone was getting depressed about silver because we've gone down from 28 to 22, and it feels like in the past week, it's like everyone's turned on again. It's like, holy shit, something feels different. And I don't know if it's just teasing us or not.
Well, there's something else. There's something else going on at the CFTC, the only regulator for the COMEX derivative con. The Dan Berkovitz, the commissioner Dan Berkovitz, who was the head legal guy at the CFTC during the JP Morgan and Friends manipulation game back in 2009 to 2014, is leaving today. Today is October 15th. He's leaving today, and he's going to work for his old boss, Gary Gensler, who was the head of the CFTC back in the day too. There is a lot of stuff going on right now with silver, with gold, and with cryptocurrencies, all the alternatives to this crazy unbacked fiat system that has completely gone off the rails. So there's something big that's going on. And the CFTC is only left with 2 commissioners out of, they're supposed to have 5 at all times.
Do they have anything in their charter that prevents them from taking any action because they just are under, like, I know some of those different commissions can't do anything unless they have a quorum.
They don't do anything anyway.
Okay, that's a good point. Good point. Good point. You got me there. But I want to change the subject. In the past couple of days, let me share something here. All the Fed governors seem to have changed their tune.
Or left. Two have left.
Yeah, but here's one. Fed's barking. If it turns out inflation isn't transitory, there's no shame in saying that. And my smart ass comment was hyperinflation confirmed. Then Moynihan, the CEO of Bank of America, he had this comment, like, at the same time, inflation isn't temporary, it's permanent. And it's like, and there was one other one in here. It's like they all got on the same memo that morning that said, all right, we need to drop the whole transitory narrative. We need to CYA and start talking something different about inflation. It's like, maybe they saw some numbers from, I know these guys have their own research departments and they probably see the data that the BLS sees before the BLS. They got the same sources as the BLS, right?
They all get the same talking points. They all collude together on everything. If the Fed has something to say, I've done research into the Fed people, shall we call them, that are literally in charge of talking to banks every day. They all collude together. You have to, with an unbacked fiat monetary system, you have to have everybody in line with each other. You can't have JP Morgan running out wild, buying 1 billion ounces of silver. That is unheard of unless, something else is going on behind the scenes. They nailed Buffett for 120 million ounces. They nailed the Hunt brothers for less than 100 million ounces. You can't have JP Morgan out there buying 1 billion ounces of silver.
Okay. Yeah, they can control that in the United States. Yeah. But there are many multi-billionaires outside of the US who have,
where are they?
Who essentially have few money and they're outside of the control of US authorities. Why haven't some of these guys come and just cleaned out COMEX, right? Because they can do it.
Go ask the Hunt brothers. Go ask Warren Buffett. Go ask all the people who have been disappeared because they tried to do something like that. Yeah. It's a big club, and you're not in it.
Yeah.
And that big club, the Achilles heel of this big club is silver. That is the number one thing. I know a lot of people say, well, Bix, who cares about silver? It's the stock market, it's the bond market, it's the dollar. No, it is silver. Only silver can take these assholes down because it's a tiny market that is massively undervalued. And the minute silver's freely traded, we won't know the price of silver. It will go so high, we won't know it.
So there's this issue with why aren't the wealthy people stepping up to the plate and just cleaning out the COMEX? And there's a lot of, wealthy multi-billionaires who are outside of the jurisdiction of the US. So they're immune from the powers that be in our country going after them. And I wonder, why aren't they stepping up to the plate and taking action? I mean, like China doesn't give a shit what we do in America. It's like they're actively going out buying mines and securing supply and stuff that will never make it to the bullion banks. The ore's just shipped to smelters in China and then the finished products in China. Why aren't they stepping up and just, ending the charade right now, Bix?
Well, I would say the big money knows the big picture. They know that the vast majority of their wealth is in the current system. You don't want to, cut the neck off of the snake that is eating its own tail. If you're in the system and you own property and you own stocks and bonds and you're doing well, you're kicking ass, you don't want to go in and buy all the silver. That would literally destroy the entire system.
Mhm.
Silver is so important in such a small market that the big money who are in the know, no, they never do that. They get a call from their bank saying, hey, I got somebody who needs to talk to you about what you're doing right now.
Okay, so let me ask you this. At what point does silver destroy the system? That's not 40, that's not 50. I mean, at what point of a price is there a real problem for blowing shit up in the
There's
system?
a real problem right now. I mean, the word is Deutsche Bank had to get bailed out of their silver position. The criminal shorts right now are short so much they are losing. They are underwater on both their gold and silver positions. These banks can't afford to lose that kind of money. Remember, they're got rehypothecated assets everywhere. They're a fractional reserve system. Everything is fractional reserved. So if JP Morgan loses 10% of its total value, poof, the bank is gone. If UBS or Bank of America loses big on these bets, like it's in 20, 30 billion dollars, which right now they're down over 10 billion.
Well,
in their gold.
they're claiming that it's not their own, these trades are not on their own house accounts, that it's on behalf of customers. So how would the banks actually lose?
They are lying. First of all, they are lying. That's why Goldman Sachs came out. You had Curry come out and say, oh my God, these shorts aren't real. These are hedged from ETFs. I mean, that was the dumbest thing he could have said. He gave up the ghost on why these banks get away with it. They tell the CFTC, these are hedged of real physical stuff. So yeah, I mean, there's 1,000 reasons why silver should be 50 times higher than it is right now. Remember, silver is 1/2 of its all-time high, less than 1/2. Under $25 is less than half of its all-time high, whereas gold has doubled. And is there more gold being mined? Absolutely. Where does it go? It goes in the vaults. It keeps adding. Where does the silver go? It gets consumed. It gets put in flat screen TVs and smart bombs and solar panels and electric cars.
Yeah.
So the reality is silver is so massively undervalued now that there's no way out of it unless you shut down the COMEX, say, okay, everybody settles in cash, and then never open up the COMEX again, which is options, futures, and options exchange. That's all it is.
Mm-hmm. Yeah, and that raises the question here. I'm gonna show my other graph that the audience probably has seen before. I think eventually this is the chart that's gonna blow it all up. It's the it's the supply crunch. It's like at some point, what's coming out of global mines is going to reach a level where it's less than what industrial demand is using each year. Yeah. So at some point, someone doesn't get their silver, right?
Well, that's the problem, is that you look at those numbers and that's a COMEX, 1 day of COMEX trading. I mean, the dollar price of silver is determined on COMEX futures and options trading 500 million ounces every single day to rig the price of silver. If that meant anything, it should have meant something 20 years ago.
Yeah, it's way beyond hedging. I mean, there's no reason to be trading 500 million ounces a day in the futures market for an underlying market that just doesn't even need that. I mean, it's ridiculous. That's the paper game that we have allowed them, that they have created.
It's something that they can't stop doing or everything falls apart. If Bank of America goes away, good night. That's a too big to fail bank, meaning everything else will go away.
Yeah. Well, Bix, I want to thank you for joining us to give us an update. That was very interesting. All the research you've done on SLV and what was going on back in January, February. That was stuff I've never heard before. And we appreciate you coming to share it with our audience.
Sure. Those guys haven't gone away either. They still have a huge position. So we'll see what they do with it.
Yeah.